Hello, everyone. Today on the final bar, my guest is Joe Duarte from Joe Duarte in the Money Options.com. We'll talk about one particular group certainly has been impressive moving to the upside and the overall market conditions, which arguably today in a bit of a digestion mode, a lot of choppiness around here, a lot of earnings. We've got the Fed meeting today, so a lot of movement. S&P netting sort of flat, selling off into the close. What does that mean for the long-term trend? Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to today's edition of The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist here at StockCharts.com in a sunny Redmond, Washington. Thanks for joining us every weekday after the close as we look at these markets together, focused on the message that the markets themselves provide. Ralph Acampora, one of my mentors, always asked the question jokingly, if you were trapped on a desert island with one indicator, what would it be? And he always answered price. If I had nothing else, I'd look at the markets themselves. I'd look at the price, see how that was changing. That is the one thing you absolutely need to understand things. Everything else is just qualifying, confirming, validating, doing different things to validate what you're seeing with price itself. But it has to start with an analysis of price. So when the question is, what are the overall market conditions? When I bring up a chart of the S&P and it's at or near all-time highs, my answer has to be, it's bullish. The market's in a raging uptrend, and I can tell that by the fact that the highs keep getting higher, the lows keep getting higher as well. As long as that continues, the path of least resistance is up. Now, we have a lot of potential catalysts this week for that to change, especially earnings of some of the largest technology and other communications companies. So we'll track those as much as we can. Today, we have a segment called The Bottom Line, where we'll focus on earnings reports this week. As a reminder, we have some great guests coming through the show. Today, we have Joe Duarte, who's been on the show before. He does a really good job. And I'm always humbled and thankful to have people that use stock charts better or more effective than I do. And I would put Joe in that list. He's a power user, and I always pick up some ideas when I see his charts. Next week on Tuesday, we have Jeff Weiss from Clearview Trading Advisors. On Wednesday, Sean McLaughlin from All Star Charts. Then on Thursday, the 6th, Xenia Taubina from XT Financial Services. Xenia is more of a short-term analyst focusing on Elliott Wave, so very different toolkit and time frame than I use, and I always find that to be really valuable to hear what someone with very different approaches think about the same markets that we're all trying to figure out together. Let's go on with our market recap. As I alluded to in the introduction, it was a choppy session for sure. There's sort of upswings and downswings. Net, what did we do? Really didn't go much for stocks. The S&P sort of finishing around 4180, which is not far from where it ended the day yesterday. I call days like this a digestion day, and I name it that. Thinking of having a big meal, whether that was a big sell-off or a big uptrend, think of you've had a directional move. That's your meal. Now you need some time to just digest the meal, kind of take a break before you go on to your next activity. And that's what the markets arguably have been doing here for a little while, sort of a digestion zone, a consolidation time, a period to make sense of things. Now, what happened though is you had some distribution in the last hour or so, and that pushed a lot of the averages into the red. Things were sort of mixed, decidedly mixed earlier, around 2:30, 3 o'clock Eastern. But by the close, the Nasdaq, the Dow, the S&P have all finished in negative territory, not by much, but still a little bit. Small caps actually remained in the positive. They rallied through much of the day, again, although only up 1.2%, not much, in mid caps flat as well. The VIX is actually a little bit low, around 1730. 10-year yields had been going higher through the course of the day and then pulled back and actually settled back and finished right about where they ended the day yesterday. The TLT also flat, and the dollar down about 1/3%. No real huge movement there. Gold actually was an interesting mover through the course of the day. Commodities in general had a nice rally earlier, kind of settled back into minimal gains, but gold, silver appreciating, silver finishing flat, gold about 0.3% higher. Someone, by the way, we don't talk about things like soybeans very often, but The charts of some of the grains like soybeans, corn down today, but overall, soybeans, one of the better long-term charts of what I've seen here recently. Cryptocurrencies actually mixed. Bitcoin actually finishing higher a little bit, around 55,800 plus. Not up a ton from yesterday, and again, similar to stocks, sort of a choppy, volatile session. Let's look at a daily chart of the S&P and just focus on it. And again, when I'm looking at this chart, the long-term chart, looking at the last year, if I'm asked bullish or bearish, there are plenty of reasons why the market could go down, and you've probably heard them on the show. We talk I've always felt when the market's going higher, you look for signs that the market may go lower. Same thing when the market's in a downtrend, I'll look for signs that there's signs of positive green shoots coming out that suggest that things are starting to improve a little bit. It's always thinking like a contrarian, and what we're seeing today though is again, the long-term trends are positive. We made another all-time high today, right? It doesn't matter what we did at the end of the day. If we keep making new all-time highs intraday, the market's not that bad. Now, in the short term, you had a bit of a distribution going into the close here. You've had a couple candles on the S&P chart that I call a doji candle. If you look at the SPY, that's usually a little better read. And if we do a candle chart and focus maybe on just the last 3 months or so, that'll give us a short-term read. So this is, if you're looking for a reason to be bearish, and that's a horrible way to say it. And please don't take that as an excuse to embrace confirmation bias and you're just looking for something negative, and I'm giving you that piece. But here's what's happening if you look at the evidence, right? We peaked out so far here in mid-April, second week in April. We have a doji candle. That's when the open and closes are right about the same level. You have a high and a low that are outside of that. But overall, after a period of going higher, we have a day of indecision. And usually that means short-term negative. If you look at what's happened, we've reapproached that same level, that same price range. And we have this series of candles. Now, you may not call these doji candles, but they look pretty close to me. And today, pretty, essentially directionless, right? The last 3 days, Monday, Tuesday, Wednesday, essentially, I really haven't gone anywhere from Monday's open. We essentially opened up from Friday's close, and that's been it. So directionally, and you can see that from the earnings, you're having companies that are working, you're having companies that are not. You're having a Google do one thing and a Microsoft do something else. And those are big mega cap names that have big weightings on the index. And when you have that dispersion, when you have stocks like Microsoft, moving lower after earnings and actually rallied pretty good here. It looked for a while like it was going to move materially lower. And then you have Google that has a nice rally on the same day, but you can see here, right? Microsoft traded lower, but then closed back toward the peak. Google actually traded higher, but then closed back at the lows. And so it's certainly this mean reversion type of thing. It is clearly a market in digestion mode, indecision mode. But again, when that happens, you have to give the benefit of the doubt to the longer-term trend. The longer-term trend has been positive. And when you look at the chart of Google, when you look at the chart of Microsoft, overall, there could certainly be pullbacks to the 50-day moving average, which would over the long term still be completely reasonable in terms of the trajectory of the charts. But gives some room to pull back and pull back from all-time highs before resuming an uptrend. So I'm not seeing anything horribly negative. I'm seeing things mixed. I'm seeing things in pause mode, in wait and see mode. Now, obviously, we have the Fed this week, as well as a lot of big earnings releases from some of the large. The amount of market cap that's represented on the earnings list this week is pretty significant. As I mentioned, later in the show, we're going to do a segment called The Bottom Line, where we focus particularly on some earnings releases and look at how charts have traded into the earnings date, how they're trading afterwards, and see what sort of conclusions we can draw about the overall sense of our earnings season. When I'm looking at the chart of Microsoft, I see the peak from September, I see the breakout in January, I see the pullback to that breakout level in February into March, and I see the resumption of the uptrend. So even with today's pullback overall, it certainly seems like the path of least resistance is higher until proven otherwise, right? Until we break the 50-day, until we break the swing low, I think Microsoft remains above 230, remains above its 200-day moving average, and overall, this is still a good long-term chart. It's hard to find really bad long-term charts, and that's maybe one of the reasons why the market seems so good. When I screened earlier for stocks making new swing highs, and sorry, I'm jumping around a bit, but my mind is full of all of these charts that I've been flicking through. One of the things I look for are new swing highs and new swing lows. This was the scan I ran earlier today when I was just looking for stocks making a new 13-week high. Do you know how many stocks are on this list? It's about 150, maybe a little more than that. Something like that when I ran it earlier in the day. Not a bad list. I mean, there's a decent list of stocks that are making new highs. You know how many stocks are on the new swing lows list, making a new 3-month low? 5 stocks out of all US listed stocks above, I think, 10 billion market cap, maybe a little lower than that. I forget what lower threshold I had, but a handful. You can count on one hand the number of stocks making a new swing low. So it is an order of magnitude difference in terms of stocks in decent uptrends that, granted, have plenty of room to pull back versus stocks that are actually breaking down through any significant or key support levels. So overall, trend seems to appear, relatively stable. Just to wrap up our market recap, wanted to point out on the sector side, energy was the big winner today with the XLE up 3.4%. If you take the gain in energy out, it was much more of a mixed day. We had communication services up about 0.9%, technology down about 1%, everything else in the middle, which nets out to sort of a sideways day. Energy very much the outlier, up pretty significantly. And it's interesting, we'll look a little later at some of the stocks. We looked at FANG on Monday, if I remember right. Diamondback Energy is a great illustration of a sector, a short-term pullback and potentially resuming its uptrend. We need to take a quick commercial break. We'll be back with my guest, Joe Duarte. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. Appreciate you joining us every weekday after the close as we look at these markets together using stock charts, using the power of data visualization to understand investor behavior and market dynamics. As a reminder, we love to hear from you, particularly questions that are coming up in your own process of trading, investing, analyzing the charts in your login. Shoot us an email with any questions that are coming up. We'd love to point you in the right direction. Our email is thefinalbar@stockcharts.com. We are on Twitter @FinalBarSCTV. Finally, on our YouTube channel, you just put a comment below the video that you're watching with what question comes up. We'll capture all those questions and hope to answer one of your questions on Friday's show, our next mailbag segment. Also, the new StockCharts TV on demand is available, ready for your use. It is free. It's really well designed. I'm proud of the team. A lot of work has been put in to elevate our content from some of our fantastic hosts, our wonderful guests, just all the great educational and informational content that we're putting out on StockCharts TV. Go to stockchartstv.com, use your email, set up a free account. You can start watching and saving content immediately. We are also on all the app stores. Just search for StockCharts TV on demand. I want to welcome on today's guest, Joe Duarte. Joe's the founder of Joe Duarte InTheMoneyOptions.com. He's the author of a number of books on investing in your 20s and 30s, books on trading options and others. It comes to us from Texas, from the Dallas area. Joe, welcome back to the show.
Great to be here, Dave.
So as we talked about earlier in the show, there's no denying we're in a pretty strong uptrend this week, sort of a choppy period, right? With a lot of earnings, the Fed, meeting today. Overall, we're looking at a chart of the 80 line, advance or decline. What's your big picture perspective today?
Well, first of all, I always look at the advanced decline line because the algos can't mess around with the prices due to weighing. So this is, in my opinion, a true picture of the market's trend. And there's no doubt about it, we're in an uptrend. If there was one thing I would be somewhat concerned about is that we are getting near that 70 area on the RSI. You note that I will put indicators on the advanced decline line as if it was an index. And so when it gets to that 70 area, as you're seeing in the market right now, things start to get a little bit choppy. But so far, the 20-day and the 50-day moving averages have been very good support over the last, 10, 12, 15 months. So, a trip back to the 20 or the 50 might get us another rally.
And overall, I'm struck by just the trend, but I can see exactly what you're saying, right? We reached the overbought conditions. You can see how many times the 80 line is pulled back soon after. Chart number 2 is looking at lumber, which a lot of people, I think, very rightly use as a broad measure of economic strength. What are you seeing here?
Well, this is a couple of things here. First of all, you know that supply chains are completely disrupted after COVID, and so there's a big mess with availability of lumber to build houses. Uh, but I think the striking point here is that I was looking up earlier at the lumber futures contracts. And the average price for the last 5 years in the July contract is $384, and we're looking at almost $1,300 now for the lumber contract. And so what that's telling us is that supplies continue to be tight. And with all the movement of people out of cities and the demand for housing, the odds are still very good that we're going to see higher lumber prices.
Very interesting. And no doubt we've seen housing prices resilient, especially in your area, in mine as well, in the Pacific Northwest. Finally, you're highlighting a particular stock in a group that has certainly emerged in a position of strength. Talk us through this idea.
Well, again, Louisiana Pacific, it's the same kind of thing that you're seeing in lumber. And what's interesting now is that because of artificial intelligence and all the things that we see in the market today, it used to be that the commodities sometimes lagged the stock. I mean, that's a classic John Murphy observation. Stocks lead commodities. Now it's like they're together. You can superimpose the Louisiana Pacific and lumber charts on one another, as I do on my weekend updates, and it's insane, the nearly 100% correlation. Other thing here, RSI is overbought, but look at accumulation, distribution, and on-balance volume. Money just keeps coming in as they buy every dip on this thing.
It's such a great chart, and again, I'm struck by the consistency of the uptrend on the chart of LPX. So just time for one question, if we could, Joe. When you're looking at this market, we were talking earlier about just the S&P testing new highs. You highlighted the advanced decline line pretty strong, and plenty of stocks like LPX are in decent uptrends. What would you need to see to make you less optimistic of the market conditions? Is it following through on the overbought condition and pulling back a bit? Is it breaking through a particular level, or what signal, what indication would you look for to tell you to be a little more risk off versus risk on?
Well, it's pretty standard stuff, because again, as I always talk about the algos, I mean, they follow simple technical analysis. So 20, 50-day moving averages, those are the areas, as you've already highlighted, that are, really crucial. And that's where the markets pull back to. That's where key support and resistance is. If there's significant breaks in those areas, then you have to start worrying about it, because things happen so rapidly now because of the interplay between options and stocks. So that's for another talk. But just classic technical analysis holds up fantastically in these markets.
One of my mentors used to tell me the most bullish thing the market can do is go up. So far, we're certainly seeing that pattern play out. Joe, it's so good to have you join us on the show. Thanks for bringing a couple charts with you, talking through your take, and wish you well. Stay safe, be well, and we'll have you on again soon.
Okay, thanks, Dave.
That's Joe Duarte. Joe's the founder of Joe Duarte InTheMoneyOptions.com. He actually is a frequent guest host on one of our other shows on StockCharts TV called Your Daily Five. It does a really good job of bringing up, five charts sort of top of mind for him when he hosts that show. So if you've not seen his content, I'd certainly point you there and see some of his ideas. He tends to bring charts that reflect market conditions really, really well, and I like that take. Looking at stocks like LPX and LPX, right? And it's interesting, as he was talking about that, it struck me how many charts look similar, not dissimilar to LPX, right? As I mentioned earlier, when I was running a screen for stocks making new 13-week highs, I think some of the railroads look really, really solid. Absolutely right. But I'm struck by how there are emerging pockets of strength or emerging broad, uptrends in places like financials and others that are just consistently breaking to new highs, strong trends that are staying in place. And again, while I like speculating, I like thinking with caution about what the market could do, I'm struck by how the average stock looks pretty good right now. And when that changes, then I'm going to start being less optimistic about overall market strength. But at this point, still very, very constructive. Our next segment is called The Bottom Line. This is a new segment. We wanted to focus, we've talked a lot about earnings when appropriate, but this week in particular, you have so many key stocks that so many people pay attention to reporting earnings. I thought it'd be really helpful to focus on some of the key names that have reported so far this week, some of the ones that are coming up through the remainder of this week, and just look at how technical analysis can be used around earnings season. Now, one of our fellow StockCharts TV hosts, excuse me, I'm totally blanking. Tom Bowley. Tom, sorry about that. Tom Bowley from Earnings Beats. When I think about earnings, I think of Tom's work. He does a really good job of, focusing on earnings wins and earnings misses and how the charts are related to that. And so perhaps inspired by Tom's really good work in this space, I thought it'd be helpful to focus on some of the stocks that have reported. Now, it's worth noting, if I can actually type Tesla's ticker, there we go. It's worth noting that earnings are just one of the many catalysts that can cause a change in stock price, right? I mean, when you're looking at the chart of Tesla, it's not just about the earnings reports, although some, fundamentally oriented investors would tell you it is mostly, if not all, about earnings. All you need to do is understand the earnings trajectory and the price is going to follow. And that's true most of the time, or even some of the time, right? And there are plenty of times when a company has good earnings and the stock price goes down. I would argue you're actually seeing some of that this week, where company does well, earnings are pretty good, and then the stock gets dinged, and then it's trying to figure out what it was that people were not impressed with. It's not just about the quarterly earnings figure versus the estimate. We're focusing on stocks like AT&T. We're focusing on the HBO Max subscriptions, right? We're not focusing on AT&T's handset sales and how that contributes to the actual bottom line, the earnings of the company. So earnings releases are a chance, I think, especially now, not just to focus on earnings, not just to focus on top line revenues, but also on products and subscriptions and all the other things that people are using to value companies now. So having said that, the chart of Tesla, when I think of a chart that indicates indecision, Tesla might be it. We are not far off of, the first week in January, which arguably is the heyday of Tesla's chart. This is a stock that's been in a resounding uptrend, finishes the year strong. The first week in January just accelerates to the upside and makes what has become almost exactly the closing high so far for the year. January was a sideways month. We kind of went down and tested a swing low there in March, a higher low around 600 here in March, which is why the 600 level, I would argue, is an incredibly important one for Tesla. If and when we get a further distribution back below the 50-day, that's where I would be looking for support. So earnings, essentially didn't really do much to cause Tesla to go higher. Overall, leading up to earnings on Monday after the close, the stock was sideways, right? Overall sideways. So it wasn't rallying into the announcement, indicating a lot of expectation of goodness. Not a big distribution showing fear of an earnings miss. It was essentially sideways. And since then, the stock's come off a bit, but not a ton. It's sort of still hanging in there, remaining above the 50 days. So this is one where I feel like it's more about the speculation. It's more about the anticipation and less about the numbers that may have been shared there. I mentioned yesterday we had two obviously big stocks going up. Both of these, Microsoft number one, and then Google number two, having a nice rally into the earnings release. You can see two very different movements in the stock. And again, I'm not a fundamental analyst. I'm not an earnings analyst, so I'm not going to speak with great detail on the story of Microsoft's earnings. I am a very proficient in charts, and I will tell you what the charts are telling you about expectations. Both of these stocks, the charts were very impressive and very constructive leading into the earnings announcement. It's interesting to see Microsoft overbought Google as well, and that's something to pay attention to. What happened today is you had a gap lower on Microsoft opening down, and then during the day closing much lower. By the close, we actually got back up toward the highs, which in the short term suggests some short-term appreciation in the next day or two, and that's something I would look for there. Alphabet, you actually have the exact opposite. This one was actually a nice earnings win. You had a lot of traded higher in the after hours, opened up higher today, traded higher, but by the close, we came back down. This starts to look more like a shooting star candle, which is an open, you trade higher, you close back more toward the lows. That's actually a short-term distribution signal. So on these two, you actually have a Paris trade that actually worked pretty well today, but now all of a sudden mean reverting and coming back in. So it's short-term constructive for Microsoft, short-term bearish for Alphabet. Again, I'm not an earnings analyst, but I was struck by how, from what I read, the earnings on Pinterest were not horrible. There was nothing really dangerous that I saw indicated, but the stock certainly took a beating, down closing down. It was down about 10% in the aftermarket yesterday, closed down today about 14.5%. And again, what's interesting is this: if you remember the chart of Tesla in your mind, it's all about where we're at relative to those support levels. So the good news about Pinterest is as a well-established support level right around where we're at, sort of in the 60 to 65 range, which is right in this area. The 200-day moving average is actually right around there as well, which means we're right at that sweet spot where if you buy into the long-term story of Pinterest, we're at a point where it's not a bad place to assume a short-term bounce and a move higher. But what we're now seeing is a lower high, now a lower low. You can see the relative strength is making a new 4 or 5 month relative low. So overall, I'd much rather have a stock showing signs of accumulation versus distribution, which is what we're arguably seeing right now. Payment processors certainly doing very well. And I'm grouping Visa, MasterCard, PayPal as one group. You had Visa after the close on Tuesday and MasterCard actually before the open tomorrow. Visa up pretty good today, about 1.5%. MasterCard, again, has not reported yet, but the stock up about 1.7% as well. PayPal is here, and that stock is probably the least attractive of the three in terms of its overall trend, but testing a short-term swing high here. What strikes me especially, Visa years ago actually used to be, I called it one of my bellwether stocks. I had Visa, Alphabet, I want to say JP Morgan were sort of three stocks that I grouped as a bellwether index. Not a bad bucket of stocks right now with Visa breaking to a new swing high. When you look at Visa and MasterCard, they've had this period where they've been underperforming because there's this really choppy, gradual trend as a lot of other stocks have gone vertical. But it's nice to see that Visa has bounced off its 50-day moving average, breaking a new swing high. I like those charts all around: Visa, PayPal, and MasterCard all setting up very well. And we're out of time, which is just so brutal. Last one I would point out is Boeing. You know, concern on charts like Boeing, charts like Eli Lilly, which is getting a little off the topic, but you know, charts like this that are breaking down through swing lows. Again, given the strength in railroads, charts like Joe Duarte showed and elsewhere, am I tempted to look at a stock like Eli Lilly that is breaking down through a swing low? A stock like Boeing, which is testing its lows. Not so much. I'd much rather own stocks that are showing signs of accumulation. I would argue in the last month, Boeing is more distributive than accumulative. What's interesting on energy stocks is you've seen a reaccumulation. You've seen those charts rotate higher. We're not seeing that yet on the chart of Boeing, and that's what I would certainly want to see: a higher low of some meaning. That was our segment, The Bottom Line, focusing on a lot of the themes. And again, there's so many companies. In a normal week, we could have gotten through all of them in a minute. Now we didn't even touch the number of stocks. So make sure you focus on the earnings calendar. Make sure you use the symbol summary function on StockCharts to see how stocks are trading after hours. But we need to wrap the show. Go to the 3 and 3. 3 charts in 3 minutes. Here we go. Chart number 1 is energy. We're looking at the XLE. We highlighted Diamondback FANG earlier in the week on Monday's show, looking at charts that were starting to, or potentially testing key support at an ascending 50-day moving average. All of energy rallied really nicely today. And if you look at the average stock in that sector, especially things like pipelines, actually rallying, turning higher in a pretty decent way. So I think that strength in energy, I think this is the beginning of further upside in that group, and correlates pretty well with financials, which takes us to chart number 2. We sort of have the value trade working together today with Goldman Sachs, many other banks on the new highs list. Goldman Sachs not on the new 3-month high list, but caught my eye breaking above its most recent swing high. So this is a pullback to the 50-day. It's made higher lows since doing so. It's making higher highs. We're now testing the long-term high there around 350. We'd love to see a close above that through the remainder of this week to signal further strength in Goldman Sachs. But overall, rates starting to go higher. You're seeing stock, charts like Goldman Sachs improve, and I think the relative strength could certainly go higher from here. Finally, Eli Lilly, I mentioned this at the end of the previous segment. You know, looking at stocks, there aren't many stocks that are breaking down. And so screening for stocks making new lows is actually kind of a challenge right now. But Eli Lilly was one that popped up on my screen of new 3-month lows. And again, all else being equal, I would much rather stocks breaking out like a Visa versus breaking down like an Eli Lilly. And I don't appreciate stocks failing at their descending 50-day moving averages and then making a swing low. To me, that signs much more distribution than accumulation. Folks, that's our show for today. Special thank you to Joe Duarte from Joe Duarte InTheMoneyOptions.com, joining us from Texas and sharing his big picture thoughts. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be safe. Have a good night.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.